Welcome back to my channel, guys. It's another video from Boys of market structure. Comes to understanding market structure, it's trading price action. Now, guys, I want you to take note of these three things very often: retracements and, and the reversals. Retracements, continuations, and reversals. Typically, there's two market conditions I love to trade. One being the range market, also called the consolidation or the sideways market, where you tend to see the markets bouncing off support and resistance. Yes, it's called a consolidation. Ranging markets, also called consolidation. Or best still, it's called a sideways market. And then the other very important market condition, which I love to trade and I do take advantage more of, would be the trending market. And for the purpose of what we're going to be discussing in today's video, I will be paying attention to the trending market. Well, as you must know by now, the trending market comprises of two types, where we have the uptrend or the uptrending market, also called the bullish market. And then we have downtrend or a downtrending market, also called a bearish market. Now, typically, the bullish market or the uptrending market is a market situation where we have price giving us series of higher highs and higher lows. So we have the market giving us series of higher highs and higher lows. And then a downtrending market or the bearish market is a market condition that's characterized by price providing us with a series of lower highs and lower lows. The typical line chart example of this would look for an uptrending market. Clearly, our price must have bought. Then for some reasons, while it's selling downside, only for price to continue back again to the upside and then clearly closing and breaking and closing above the previous highs, thereby presenting us a new high that is obviously higher than the previous high. Then we clearly have a low that is not as low as the previous low. And then we tend to see price continue in this phase for a while. So obviously, this was the lowest point price was at before we took up, and price traded to a high, and that was the highest point before we had this nice selling movement to the downside. And then price presented us a new highest point, making this a higher high. And the low that led to your most recent highest points then becomes higher low. And you tend to see price continue in this move, clearly showing uptrending nature of the market. This being a typical line chart example of an uptrend. Now, when it comes to retracement, a retracement is a short-term, usually temporary price movement against overall. So clearly, we're having an uptrend. Now, obviously, the market is headed to the upside. But then because price doesn't just move all the way to the upside, there is a pattern which price trades from a certain level to another level. And usually you'd see the pattern come in a zigzag form, just like we are right about here. What price does is what price tends to move. We have a nice move to the upside. And then we have a selling movement. And price continues to trade higher than the previous high, giving us the higher high, clearly making this market structure in an uptrend. And then what price does is price then comes and temporarily sells. It's more like a resting period for price. It's more like a period where price tends to come and gather enough momentum to edge even much higher to the upside. So now what you have to understand is the movement that is against the overall trend. Sell movement against the overall buying movement is the retracement. So we have what price temporarily sell of retracement. And what happens is what where usually the market is by the buyers more favorable discounted price to get in on a buy position, moving price even much higher. So we have the retracement kicking, just a temporary sell for what for more buys to stay back. And then when once we have next high, clearly higher than the previous high, it tends to come into the markets a temporary movement against the overall movement, which is the retracement. So price does a sell retracement coming to a discounted price level, only to continue what to make it even more higher. So clearly we have up to it. Clear picture of it. So I have the sell movements, which are usually temporarily, being the retracements, the sell move right here, being the retracements. Now you have to understand lots of persons tends to give these different names in the markets, but they all mean the same thing. So you could either see people call these retracements or pullbacks, or correction. This all talks about the very same thing. Retracements, pullbacks, correction. Now, that is for an uptrending markets. So for an uptrending markets, usually the sell movements that are temporary are the retracement movements. They tend to usher in even more stronger buys that end up presenting us more swing highs in the market. Now, usually after the retracements, then comes the continuation. So clearly we have an uptrending market here. And for an uptrending market, clearly indicating that the market is headed to the upside. We have the retracements being the sell movements that are against the buy moves in the market. And then after the retracement comes the continuation. Continuation because what? Price continues to make more swing highs. Hence it's called continuation. So every one of the buy movements after the temporary sell moves, after the temporary sell retracement moves in the market, then becomes a continuation move. So they're called continuation, also called impulse or impulsive moves. So every one of these buy movements in line with the market trend is our continuation moves. Continuation, also called the impulsive movement or the impulse. I think there's also another word for it. Now, this is clearly for an uptrending market. And then for a downtrending market, which is characterized by the market presenting us with series of lower highs and lower lows. So clearly we had a sell-off from a high, or like the highest point price was at before we had a sell-off. And then price came right into a low. To then present us a lower high, leading us to even more lower prices, forming lower lows. And then we tend to see this continue for a downtrending market. Now, very clearly, this is a downtrending market, owing to the fact that we're having to see the market give us a series of lower highs and lower lows, which is a characteristic of a downtrending market, telling us the market is clearly headed to the downside. Now, every buy movement against the overall downtrend, against the overall downwards movement in the market, yeah, tends to give us our retracements, pullbacks, correction, because we have said the retracement is usually a temporary price movement against the overall trend. Because this is a clearly seller's market, we have a temporary buys that kicks into the market, presenting us with our retracements or pullbacks, where price tends to give sellers a favorable price to get in on their sell positions, taking the market even much lower to the downside. So I have the buy move right here. So every of the short-term buys in a downtrending market presents us our retracements, our pullbacks, or our corrective moves. And then usually after the retracements the pull comes the continuation. So RO here stands for retracement. Every of the buy moves are the retracements. Just like we have every of the sell moves for an uptrending market being our retracements right here. And then we have the continuations that always kicks in after the retracement comes to an end. So the continuation movement, also called the impulse movement, is the movement that's always in line with the market's trend. So for a downtrending market, we have the temporary buys kicking into the market, being our impulse, being our retracement rather, and then the longer sales being the continuation movement. Now there is a very third important concept, which is the reversal. A reversal or reversals a complete change in the market's overall direction. It's a complete change in the market's overall direction. Now, while it is very important to be able to understand and identify the retracements and the continuations in the market, as these occur more often than the reversals. But then, however, it's very important also to be able to identify where there tends to be a reversal in the market, owing to the fact that this helps you better position yourself also to take advantage of new kinds of trade opportunities in the markets, which will obviously talk more on this. Now, when it comes to reversal or a reversal is a complete change in the market's overall direction. What you tend to see is for an uptrending market, like what said, as long as price keeps providing us with higher highs and higher lows, we have the market structure still very much in a bullish structure or an uptrend. And then price will keep doing this clearly and obviously keep heading to the upside until it gets to a point where there's a total change in the market direction to the downside. Now, how do we tend to identify when these reversals kick in? Clearly, from an uptrending market, like what said, we want to see the market keep providing us higher highs and then higher lows, higher highs and then higher lows. And for as long as price stays above the most recent higher low, we have the uptrending market still very much valid. But then what happens is when price comes to a certain level and then trades to the downside, breaking and closing below the most recent higher low right here. This is the most recent higher low that led to this higher highs right about here. So when once price comes and then makes a strong sell movement that breaks and closes below the most recent higher low, presenting us with a low that is lower than the previous low. This gives us an indication of a trend reversal in the market. And usually what the reversal tells us that the market direction is likely changing from the buying to the selling, from an uptrend to a downtrend. So as long as price stays above the most recent higher low for an uptrending market, that market condition is still very much valid. But then when once we have a clear break and candlestick close below that higher low, clearly we have an indication of a reversal in the market. A trend reversal from bullish to bearish. A trend reversal also called a trend shift or a shift in structure shifts. You would hear me use every one of these in my videos. So clearly indicating what a trend reversal in the market. And usually when this happens, we tend to see price then continues to trade lower. And because a reversal usually indicates a change in the direction from one movement to the opposite party, when once we add an uptrending market and then a reversal kicks in, we then tend to see the characteristics of the opposite party step into the market. Because previously, when we had the uptrending markets, we had more of the higher highs and the higher lows. For a downtrending market, we would then tend to see more lower highs and lower lows now kick into the market. So you would usually see price continue to do this. Lower highs and lower lows till it gets to a point also, again, what a reversal then kicks into the market. Usually, price reversal tends to happen at certain levels in the markets. Certain levels in the market, such as the key levels, areas of interest. These are simply support and resistances. More on that in my subsequent YouTube videos. So now for a downtrending market, we can clearly see the market providing us with series of lower highs and then lower lows. And then what happens is we would continue to be in a downtrending market as long as price keeps doing this, keeps providing us with lower highs and lower lows. When once we have the most recent lower high, and once we have the most recent lower high level broken, it then signifies a reversal in the market. So as long as price stays below the most recent lower high, we're clearly in a bearish market. But then when we have a stronger buy movement kicks into the market and then breaks and closes above the most recent lower high, providing us now with a higher high. Clearly, we're having a high that is higher than the previous high. This indicates Now a trend reversal. A trend reversal from bearish to bullish. From bearish to bullish, from downtrend to an uptrend. So this is what we mean by reversal. Reversal, also called trend shifts, also called structure shifts, shift in structure. And usually when we have the reversals kicks into the markets, we tend to see price continue to make what? Impulse retracements and then continuations, retracements and continuations. When once we have the structure shift, the reversals, after the reversals, price tends to continue with the impulse and then the retracements after the reversals. So for the trending markets, we have the reversals, we have more of the reversals, a sell reversal, and then a buy continuation, a sell reversal and a buy continuation, a sell reversal and a buy continuation. For an uptrending market, we'll keep having the sell reversals and the buy continuation till a complete trend reversal comes into the market. When once a trend reversal comes into the market, signifying a shift in the structure, a complete shift in the market's direction, after the reversals, then we tend to see the markets go back to making retracements, pullbacks, and then continuations. Retracements and then continuations. Buy retracements for a downtrending market, sell continuations. Buy retracements, sell continuations. And then, of course, until we tend to see a complete direction shift, complete trend shift, being a reversal in the market. After the reversal, we tend to see the market move back to presenting us with a retracement and then the correction again. Now, I really have to ship this in very quickly. Sometimes we tend to see the market give us complicated structure. Now you tend to see, obviously, we have this market presenting us with higher highs and higher lows, clearly in an uptrend. But then sometimes we see this happens in the market where the majority of folks tends to get confused. You can clearly see we are having to see the markets presenting us lower highs, right here. And then obviously this is looking like a lower low as compared to the previous low. This is obviously looking like a lower low as compared to the previous low. So this clearly is indicating a lower high, lower low, lower high, lower low, being the characteristics of a downtrend. But then we have this movement right about here being what the characteristics of an uptrending market, where we clearly have the market giving us higher highs and higher lows. We have the most. Now, what you have to understand is, in as much as this looks like price is giving us lower highs and lower lows right about here, this is only a complicated pullback. We have this market trend still very much in an uptrend, owing to the fact that, like we said, there can only be a reversal when once we have the most recent higher low. So we have this being the higher low that led to this higher highs right about here. So we can only see the market trend has shifted, or we can only see there's a reversal in the market, a trend reversal in the market when once we have this higher low clearly taken out. So as long as price stays above the most recent higher low for an uptrending market, we have this still very much in an uptrend. So whatever happens in between the most recent higher low and the most recent higher high is only just a complicated pullback. So you can tend to see price keep giving you this lower highs and lower lows in between. However, this is only but a complicated retracement. The market trend, the market structure is still very much in an uptrend. The only time we would consider this market structure being in a downtrend is when once we have a clear break and close below the most recent higher low. For as long as we stay up below that, we have every one of these lower highs and lower lows in between the most recent higher low and higher high as just what a complicated pullback. Now, very quickly, let's take a quick look at chart examples of this. Looking at volatility 25 honest index very closely, what we tend to notice is the fact that, okay, paying attention to the market structure, we had ourselves a lower low, a lower high, a lower low. So right here, we can see clearly we are having the market in a downtrend. Lower highs and lower lows are characteristics of a downtrending market. So every one of the buy movements, short-term buy movements, is only but what? A retracement. So we have a buy retracement for a downtrending market. And then after the retracement comes the sell continuations. And then what you notice is the fact that this for us was the most recent lower high. And then we clearly had price now trading above the most recent lower high. We have a candlestick break and close above that, indicating a reversal in the markets. So this is an indication of a reversal in the market, a structure shift, a shift in structure, a trend shift, a trend reversal, whichever one you choose to call this. So clearly now this tells us that previously we were in a downtrend, and because a reversal tends to change the market direction completely, when once we have the reversal comes into the market, that tells us that we'll then see, we'll most likely tend to see the market now continue in an uptrend. So clearly we have this, and then we have this as the next higher highs. So we can identify every one of these structures in between. And then we have this as the next higher high. So we have a higher high. And then we have this being the higher low that led to the higher high. So clearly we're having a confirmation of an uptrending market. And for an uptrending market, we would usually have the buy continuations and then a short sell or reversals in between. So like we said, after the continuation comes the reversals, being a short sell. Now, you can see we are having a clear case of a complicated structure right here. So we're having a lower high here. Obviously, this looks like a lower high. And then this looks like a lower low as compared to the previous low. As compared to the previous low right here. Now, what you have to understand is, even though this looks like price is giving us lower highs and lower lows right here, as long as price does not close below the most recent higher low right here, that is only just a complicated retracement. So we are clearly still very much in a bullish market structure, owing to the fact that we had that low that led to the most recent highs right about here. So we have this low being the higher low that led to the most recent higher highs. So as long as we continue to trade above this low, the most recent higher low, whatever happens in between the higher low and the most recent higher high is only but a complicated retracement. So even though they seem like price is bringing us lower low, lower high, and lower low in between, we still have the market strength, the market structure still in an uptrend. So you would tend to see what happens is we keep having these complicated retracements in between that at a point formed somewhat like a ranging market eventually before presenting us with a breakout of that complicated retracement move, where we then add what? The nice buy continuations kick right into the market, as you can see. So you can see how every one of these in between the most recent higher low and the most recent higher highs is only but what? Complicated retracement. And now we're having to see the buyers kick right into the market with the next continuation move. So for an uptrend market, we have the buys as the continuation, and then the short sells that would then kick in as the retracement. So after the continuation, then comes the sell retracement for an uptrending market. Clearly, we had continue to see price present us with the higher highs and the higher lows. The sell retracement, buy continuations. So we have a very strong uptrending market right here. Buy continuations, sell retracements, buy continuations, sell retracements. And now we add here a confirmed reversal. We're clearly having a confirmed reversal where we have this being our higher low that led to the higher highs right about here. So technically, we would say as long as price stays above this most recent higher low, we're still very much having a valid uptrending market, but that has not happened yet. You can see we're clearly having what? Seen a break and close below this higher low, presenting us with a lower low. Even though we would have expected that what the selling pressure would kick into the market as a reversal tends to usher in a complete trend shift. And then would have expected that this would have ushered in a downtrend into the market. That did not manage to happen. We had ourselves a very strong buy trend in markets, and then we had completely shifted back to an uptrend in market, as we had clearly now have to see price had broken and closed above the most recent lower high. So this is the lower high that led to the lower lows right about here. And now we're having a clear break and close above that, indicating an almost instant reversal from bearish to bullish, from a downtrend to an uptrend. And then we are now having to see that usually after the reversals, we tend to see for an uptrending market, the sell retracement kicks in, and then the buy continuations, sell retracements, the buy continuations, sell retracements, and then the buy continuations. And then you can see volatility 25 1S index is in a very strong uptrending market, as we tend to see this keep happening. However, we have a complete reversal in the market as we speak, owing to the fact that we have had to see price close below the most recent higher low. So we've had a nice close below the most recent higher low, providing us with a lower low right about here. And then we've had yet a new lower low. And then we had ourselves this in the lower high that led to the lower low. And even in as much as we had a very quick reversal from uptrend to downtrend, it's almost looking like we're having yet another quick reversal again. So as long as we stay below this lower high, this is the lower high that led to the new swing lows right about here, we would very much likely expect volatility 25 index to continue with a downtrend as long as we stay below this lower high. But it looks like volatility 25 1S index is likely going to be having a reversal in the market, clearly looking at the 1 hourly time frame and then waiting for the current 1 hourly time frame candlestick to close. If this does close above this lower high level as a bullish candlestick, closing very clearly above this level, then we would consider a reversal from downtrend back to the uptrend. Now that is it, guys. I will be providing you with my easy trade strategy that will allow you to take advantage of trend continuation movements in the market. For that, I will be doing in my next video breakdown. Go ahead and hit the subscribe button as well as turn on notification bell so you are alerted as soon as my next video drops on here. I do hope you find this insightful. Do well to leave me your thoughts and questions in the comment section, guys. And thanks for staying till the very end of this video. Yeah, I'll see you in the next video, guys.